Hey there, financial whizzes. Welcome back to Smashing Goals, your go-to channel for all things money. Today we've got a big story to tell. But before we dive in, make sure you hit that like button, subscribe to our channel, and share our videos with your friends. Your support helps us bring more content like this to you. Now let's get right into it. Ready to have your mind blown? Buckle up, because we're about to dive into the biggest credit card issuer deal in U.S. history. So, Capital One is making a huge $35.3 billion all-stock deal to acquire Discover, aiming to become the largest credit card issuer in the U.S. Man, this is crazy. This move is happening at a time when people are grappling with inflated prices and increased credit card debt, which, by the way, is already over $1 trillion. The acquisition would allow Capital One to leverage Discover's global payment network, potentially outpacing competitors like JP Morgan Chase and Citigroup. The deal also opens the door for Capital One to compete directly with American Express and reduce dependence on Visa and MasterCard. I am telling you, this is a game changer. Additionally, Capital One aims to expand its digital banking reach through this acquisition. While Capital One is the 9th largest bank in the U.S., both companies are primarily credit card focused. The deal is expected to accelerate Capital One's banking business by tapping into Discover's network for banks and moving its debit card business to the Discover Signature Debit Network. One interesting aspect is that Discover will remain its own brand in the combined company. Capital One plans to keep and market Discover as a distinct brand while working on changing its image problem related to customer acceptance perception. However, the deal is not without challenges. Regulatory scrutiny from the Justice Department, banking regulators, and the Federal Deposit Insurance Corp is expected. The Biden administration has been stringent on mergers and acquisitions, making the approval process more complex. Lastly, we know how high credit card interest rates are today, and who knows if it's going to get higher. But larger credit card issuers, like the one Capital One aims to become, tend to offer high interest rates, sometimes exceeding 30%, according to data from the Consumer Financial Protection Bureau. This could potentially impact consumers in terms of higher costs. So that's the scoop on Capital One's ambitious move to acquire Discover and its potential implications. Quite a dynamic situation in the finance world. What do you all think about this deal? Are you with it or against it? Leave your comments below. I would love to know what you all think.